Hello freedom traders, this is your boy Collins FT. So once more again guys, we're gonna plunge into the videos and do one more valuable content that's gonna help you with your trading strategy and your trading journey. So today we're gonna pick a random pair. Let's go with the GU, which is one of the most traded pairs out there, so it will be the best option for us to practice our strategy on. So I like to scroll without saying anything so that I don't get biased when I'm analyzing. Yeah, so I think here is good already. We clean our previous setups. So right now guys, let's go. So before we enter into the video guys, make sure you like and subscribe and press the notification button, leave a comment so that I know whatever you want us to cover next. So let's go. So my strategy is very simple guys, I don't complicate. Demand and supply, price action, market structure, that is my strategy, and you'll see how it works out. You'll see all the mistakes I make, you'll see how I get out of trades, you'll see how I do profits, and you'll understand I don't make a lot of trades, just very few, at most 3 trades, so that if I lose in the first trade I might recover from the second. If I don't recover on the second trade, I just let go, or if I see the third setup, then I go for it. If there isn't any third setup, then that was a bad day, or a bad week, or a bad month. So that's it guys. We wait for the market to come for us. We don't rush to the market. So always we have our, this is 2000, this is the year 2000. So the market was going down, so let's see what happened. Those year 2000 traders, how did they trade it? Or say if we were in the year 2000 now, could we have made money this particular period from Monday July 10 2000? So let's see guys. So we put our guards, the trend lines, so that we know where the market is going. So here with the backtesting, there is no need to be checking on the fundamentals or whatever. Then from backtesting you understand that fundamentals, they don't mean that much. The most important thing is your technical. If you understand your technical analysis, whatever happens in the market will still end up moving the way it was supposed to move. So this is very simple. You're not gonna hear any big words. You're not gonna see any Fibonacci here. You're not gonna see any indicators, all those crazy stuff guys. You're not gonna see them. All the order blocks, everything, all those stuff, you're not gonna see them. This is just simple trading, and we use common sense. We read candlesticks, we read price, and that's it. So now we're looking for entry points. So we put our key levels. These key levels are for us to know where we can enter. Is it safe for us to enter or not? So after we are done with our key levels guys, the market even started with a signal, by the way. So this was already a buy signal here. I don't know if I've traded this area before, but it kind of looks familiar. If we do 1 2 3 steps and we see that it's familiar, we're gonna skip this and go to a different trade so that we don't repeat ourselves. So this happened. This is a clear indication of a sell here. and this is another indication of a buy. So but why do we think we can buy here? It's because of this, because this was here ever since, and whatever was happening here, the target, of course, was first, the target was here, and then the second was here. So because we have to take, I'm a little wins person, like you win little, you don't have to win too much. Yeah, so this was the first take profit. Anyone who entered here was supposed to take profit at this level, and if market did break this level, then this was the next take profit, because it's not all the time you're gonna make a lot of profit in the market. It's not all the time. So sometimes you take little, sometimes you take much. Like if the market reaches at this level, then we'll then have the chance to take that much from here. But right now it's just small profit. So what the market is doing now, it's kind of indicating that it will continue to buy and probably break this level and hit the second take profit here. So I rarely start immediately with an entry, but given this and this, I think I'm gonna enter. I'm gonna put my buy stop here, and wait for the market to either trigger, or if price gives me another sell confirmation here, then I'm just gonna enter manually with the market execution. But if not, I'm gonna leave this one for a buy stop. So market has triggered, guys. So a trigger actually then came back. We are on drawdowns. The next day, the other day, things are getting not good. So here again, the market indicates, it gives another sell confirmation. So this is another sell confirmation here, and that is why you don't go all in all the time, because anything can happen. So you either hedge at this point, because if the market breaks here, your stop kicks your stop loss here, then obviously it's gonna come down at least to this point, or break also. So the same thing that was supposed to happen here can happen the opposite direction. So it's the reason why when I started, I pointed out this one. This was a sell signal, so we could actually consider the trade as a sell, but we preferred a buy because we had this already, and we didn't have anything here to confirm this sell. That's why I preferred to buy. So now the market has given me a sell confirmation. Even though I'm on drawdown, I still have to put a sell stop. So if I get kicked out, then the market is just going to continue to sell. It's a kind of hedging, but the most careful hedging. Yeah. So same way, if the market doesn't trigger here, or if it doesn't stop me out at this point, then it's going to go back and continuously uh, fall into profit. So let's see what happens next. Okay, so actually it we got stopped out, got into profit with the opposite trade that we entered, which is either hedging, or you could still do that manually by just shifting your stop loss above here, shifting your stop loss up here, that immediately the market closes or stops you out, your sell stop is going to trigger, then obviously would have been in profits here. So the market actually went down into profit but did not hit our target, and obviously it's not gonna hit because we're still kind of looking at a buy here. So such trades, if the market is going to continue to go up, price is not going to hit this place, this area, this support, because the market of course is going to form an uptrend. So this will be a lower low, so, or a higher low, however you can call it. So right now, if this candle, as it closed like this means the market is kind of giving us a signal also again that it's going back up. But note guys, this is a zone of consolidation and it's the most dangerous time to trade. So we got kicked out here, we got into profit, could have collected manually if by say 15 minutes or 1 hour time frame we saw an indication that the market is going to go right up, because this candle forming here at the daily must have done the same thing at the 4 hour, 1 hour and 15 minutes. That is 100%. So if you are observant and you see such an indication on the 15 minutes, you just get out. Yeah, you just get out and put a sell stop here, so that if the market breaks again, then you're going to continue to be in profit. So let's see if the market is right now. We've entered the second trade. As I said guys, it's 3 trades. First trade didn't go out well, the second trade actually went well if we did exit manually. So if we didn't, say you were not around and you came back and price closed, though it's still closed in profit, price still closed like uh, uh, 25 pips profit, you could still kind of exit, or you want to continue and hold. Okay, so if you wanted to continue and hold, the profit hit guys. So now we got hit out, we got back our profits here, our loss here, we did gain back our loss here because price did hit our target. It was a straight one. Then now we can become more greedy. We can say, okay, that is it for the week, or we want to observe and see if there is another major move or big move in the market. So this is a good reason why we have to enter the market with an open mind, because if you are bent on the fact that price is going up, it must go up because you've been right maybe 1 or 2 days, then you get fucked up at this point. So we had an open mind that even though we were buying, we could still be wrong. So that is why we're able to see this indication. That is why we were able to see this. Then we decided to hedge, and we kind of got back our loss and more and some profits inside. If we were determined that the price market is going to go up no matter what, then we got fucked up. So when we draw back, or when we scale out, we check in, we'll see that the market structure is kind of telling us something. Probably price wanna come right down. Price wanna come right down at this level. Price wanna come right down here before kicking up. When looking at the market structure, or we still don't know, because this was a downtrend. So it was a downtrend. It might still wanna continue to go down. We still don't know, and we can't tell. So since our level is hit already, as usual guys, we have to wait and observe whatever price is doing here, so that we decide from there. So actually it went crazy, price went crazy after that. Then we now go with our third trade guys. This is our third trade, which is a buy, because we got a confirmation, a buy confirmation here. And let's go for it. This one now, it's the profit trade. This one is the trade that is gonna give us the profit, though we are already in profit, but it's the one that is gonna make us more profitable. And it has very huge risk, guys. It's very risky, this one. And I suspect this might be the trend that is gonna break. This might be the confirmation that it's gonna break this trend line and maybe start an uptrend. So it being a very risky trade, we expect that the reward should be huge as well. So if it's going up, we're gonna kind of take profits, or we hold, and we might wanna hold till price breaks this area. So we might be hoping that price reach at this point, but it doesn't mean that we're going to hold our trades until there. So there are two steps to go before that area. First, it's not small. We're going to take our first take profit here, which is, let's remove this first one. So this is genuine practice, guys. It's not something that is for entertainment or anything. It's very clear. You see how the market is moving, and that is how the market did at that year, at that time. And with this same strategy, this is exactly what would have happened, except for emotions. Except for emotions. So if emotions could be controlled, or if the next time we face such market situations and we control our emotions, we are disciplined, we follow our strategy exactly as we are doing here, we're gonna end up profitable. So let's see what happens here, guys. So first we take our first profit here, we take the second one here, then if price breaks here, then we continue right up there. So we took the first one. This is very simple trade, guys, very simple and easy. We took the first take profit, and with this type of a trade, you go all in, because this is a very big indication. You go all in, you get out, like you close say 50% of your trade, and you observe. It didn't break the way I expected, so I would close maybe 80% and let 20% run. I don't care if I'm leaving money on the table or not, but I will let my 20% run. And what I can do is either I close 50% and bring up my stop loss here. It's still too early to bring the stop loss here, because price can still come down right here before going up, but I will still bring my stop loss here. I can take out 50%, I leave 50% and put my stop loss at this area. So this will be exactly what I'm gonna do. I get out 50%, this first take profit, then I let 50% run. I bring up my stop loss right at this area, which is a very little stop loss at this point, and I'm still in profit. So let's see what happens. So the market is hesitating. It's showing indications that it might go down. Here I'm going to collect back 30% and leave only 20%. Then I let the 20% go through all this drama here. So this is indecision in the market. After this dojis, these are called dojis. After these dojis, wherever direction the market is going, it's going to go far. It's going to go far. So when these dojis are happening, it's wiping people out. But if you are smart enough, you can stay out of the market during this time and observe from smaller time frames. If market gives you a signal, a good signal and a confirmation, you enter from there, then you're going to make a big run in profit. There are always 4 or 5 of them. So this one now gives a signal. So this is 3 already. The fourth one gives a signal, and the fifth one is just gonna run. That's how they work all the time. That's it, guys. That's what I said. So the 20% we got stopped out. Remember, we got out with our 80%, and 20% got stopped out. So as I said, price might come down here, do something, give us a buy signal before it continues. Remember, we are on a consolidation, guys. There hasn't been any major movement since we started entering in and out. There hasn't been any major movement, but yet we still profitable. Yeah, this was a profitable session. So unfortunately, we had a bigger hopes, but being realistic, which is the most important thing, we were realistic. We knew the levels where we're gonna take profit. We took the first one 50%. After we took 30%, we let 20% to run. We reduced our stop loss, and that is what happened. Instead of leaving everything, then price comes back here. Already you are in drawdown with your full account. It's crazy. You get, this is when the market starts to mess up with your psychology, and you don't think properly. You start praying, that doesn't work with the chart. So let's see what happens next. Okay, so the market now, as I said, will come down and give us a buy signal. It's kind of giving such a signal now. This is another buy signal. This one also, guys, I'm gonna enter. If I'm entering this one, it's gonna be just 20% also. And then if it breaks here, I will then add more positions. So here you don't just go in with a lot of because it might still backfire, though it looks so beautiful and pretty. But remember, I said these dojis, when they form after the bigger one comes, the market goes very far on that direction. So that is how it happened. These three, they form, then the fourth one did break. Here it did break, indicating it broke this level, indicating that market is coming down. I had this strategy one time where I was trading every 6 a.m. in the morning. I used to trade only these dojis with the 50 minutes time frame, and this strategy, it worked for me like about 3 months straight. Every single day was a win. Every single day was a win. But one day it kind of, because I was so confident, I became cocky. Then I put a lot of money on my account. Then the day that strategy didn't work, it wiped me out until the extent that I just forgot about that strategy, until I just remembered it right here. And as I said, you could see that actually I knew what I was talking about, because price after these dojis, it actually broke structure, it broke levels here. So indicating that it's either gonna go right down here, or something might even though it's indicating that it will go back up, but that is still down. That's why I said here we just go in with 20% of our usual lot size, not much, and observe what the market is gonna do next. So that is the 20%, guys. So when it does this, you just get out. There's no need to keep on holding. Always get out when you're in profit, guys. Little wins do matter. See, that's the point. Unfortunately, I pressed the play instead of I wanted us to go step by step, but already this is what I wanted to explain. I wanted to explain this one here. I wanted to explain this one, that we entered just with 20%. If with the 20%, if you see price actually tried and reach here but didn't continue, you see such a candle, guys, you just need to get out. You don't have to hold because you are in profit already. You don't have to hold. You better get out and wait for the market at this level, or because right now this is the next level here, or you wait for the market back at this level. You go look for a different pair, because if you focus on here, that is the next thing that's going to happen, it's going to be tragic. So as I played by mistake, it went. So it's still, we already have an idea where the market went, though it actually was trying to give us an idea here. But this is, yeah, this was it, guys. It was this one. That was the sell signal. Yeah, the sell that we just saw. So already everything has been played out. Yeah, another one. This was not even anything. This is the real sell signal here, because it's actually a morning star, the red color, a long wick, and a perfect body for a morning star, or a shooting star, however we call it. So that's it. So it still comes back to confirm what I was saying here, guys, that these dojis, when they form after consolidation, as you can see, this was the market consolidating here. This was all consolidation. So when market consolidates and you start seeing dojis, it means it's preparing itself. The market is preparing itself for the run. So when you see dojis, and wherever the market breaks after the dojis, as I said, always there will be three. The fourth one will give us the indication of where the market is going, and the fifth one will just be boom, the market will just go. And it's exactly what happened. I knew that because that was once my only strategy. That was once my only strategy. It worked for 3 months, and one day it just fucked me and wiped all my accounts. So I was so messed up psychologically that I just abandoned the strategy till today. That was far back in 2021. Yeah, that was January 2021. So this is it, guys. As we already saw, price is gonna go down. Price is gonna go down, 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 down. So that is it. Altogether, it was a profitable trade. Altogether, we didn't lose. We did make a profit, and this is just to tell us how to manage our ego and our greediness by being realistic and observe what the candlesticks are telling us, observe what price is saying, and that is how we control our emotions, and we make sure the market doesn't mess up with our psychology. Because if you lose the first trade, you get fucked up. You want to do a revenge trade. So but if you have a kind of a mechanical understanding of the market, or a mechanical strategy that you respect and you are disciplined, you're not going to be messed up, because you know that the next one is going to be a win. And of course, it was a win. So thank you, guys. See you again next time. Make sure you like. Thank you for joining.